Thank you so much, Mr. Halford, for joining us. Is this turning a corner? How significant is this, actually, in the fact that you think you've delivered on the plan, what Bill Winter set out to do has been done, largely, and so you're ready to give back?
I think it's a really important step along a journey. So just over 3 years ago, we had to do a rights issue. We went out to shareholders and asked them to give us money. We've spent the last 3 years getting the group on a better footing. And this is the first time that we've actually been able to say we now have enough capital that we can start to return some of that you gave to us 3 years ago. So I think it's a really significant step forwards.
But is it the end of the restructuring phase of Standard Chartered's turnaround?
I'm not sure any business ever completely finishes any particular journey. So what we have done is made huge strides forward in terms of resecuring the foundations, getting the business back to growth. The financial returns are not yet where we need them to be, but this last quarter was further evidence that we are making good progress down that route.
OK, when do you feel like you'll be almost at the end of the turnaround, and then how do you grow the business?
So 3 years ago, we did the update to the strategy. In February of this year, we gave the next 3-year plan, which was basically to take the returns up to double digit. So over the next 3 years, the absolute focus is on getting to 10% return on equity in the business. And that over a 6-year period will have taken us from a negative to a 10% positive. Not that the job is done at that point in time, but that will be a significant landmark for us.
Andy, with your Asian focus, you and Bill Winters were handled a train wreck of legal issues. Now, I get the spin is, the journey is that you're through the legal issues. What controls are in process now or in play with Winters Halford so Standard Chartered won't have the legal challenges of the past?
Yeah, we've sorted, as you're aware, some of our big legal issues that have been in progress for a number of years, and we announced that a short while ago. So it is really, really good that that is now behind us. I think the business has fundamentally changed, and over the last several years, we have put in place so much more focus upon anti-money laundering and conduct and controls like that, that the business is now in a much different position to that's been in the past. The ethos of the business has changed. People know it's really, really important, and as best we can tell, we are now off on a different footing as we go forwards.
The journey might be great, but the journey is technology. How are you going to compete with the big American banks in Asia for technology investment, or is it basically a management to have the bank taken out by a giant?
No, it's not the latter. We are a very unique business with a very unique franchise, and we have been spending a lot of money recently on technology. That will continue. There is no need to be keeping up with the biggest in the market. We can spend what we need to do in the markets in which we operate. We're funding that as we go through, fundamentally changing the bank, opening up new digital operations in different countries. We just won one in Hong Kong. So the business is moving forwards, and we're doing fantastic on our own.
Yeah, so I was going to ask you about this, virtual bank in Hong Kong. How much market share is that getting, or how much is it disrupting the more kind of retail banking market, local banking market?
Yeah, so we are one of 3 initial players to be awarded a virtual bank license, which is good news. We will hopefully be launching that towards the end of this year. We will be targeting that very much at parts of the market that we don't address particularly at the moment, and therefore we see that as being very additive to what our historic business, which is a very strong business in that country, already is.
But how much will you spend on digital products and digital disruption? I mean, are we talking billions over the next couple of years?
In Hong Kong specifically, it won't be billions, but we have been investing over the last several months already to put in place the stack that we will need to operate there. Increasingly, we will be doing similar things in other countries over periods of time, looking with other partners. In Africa, we rolled out Digital Bank. We're now in 5 countries. There'll be another 4 at the end of this quarter. So it is progressively happening across the group.
Let's look at the Winters Halford challenge. Standard Chartered, the great emerging market, the great Asian bank, has been a really difficult journey, as Andy puts it, from 1997 and way before Winters Halford. Bring up the chart, if you would. Back to 1997, the share price has basically gone nowhere in 20 years. Up we go. And here's the ugliness. How do you break out of that downtrend? So many American banks and really European banks, Andy, have had so much trouble breaking the back of this 10-year malaise. How do you break the back? What's the path to get to a decent shareholder return?
I think the path to that is exactly the one that we are on at the moment. It is about making the most of the natural growth that there is in the countries in which we operate.
Right.
And we operate in many of the fastest operating countries in the world. It is about having a safe balance sheet, and we have improved the quality of that balance sheet significantly. It's about having sufficient capital, and we've now got to that point where we can actually make returns. I think it's the collective of all of those. If we can get that to happen, if we can get the business up to double-digit return on equity, I think 2 or 3 years out, we'll have a fantastic bank in a great position, and hopefully we'll see that reflected in the share price.
Andy, I've always said this. I love the description you're giving, but it sounds like you're setting the 3-year path line here for a journey to a merger. I mean, you guys have true EM expertise. No one else has your Asian EM African abilities. You've got to be ripe for a major bank to acquire your expertise, right?
I don't think that is necessarily the case at all. We operate in a fantastic space. We are getting the business performance improving. We will get it to where it needs to get to. And we have got a great future as an independent business operating in some of the most interesting parts of the world.
What's your outlook for the business for this year? First, on China, have the US-China trade tensions had less of an impact than you thought they would?
I think in the back end of last year, there was a lot of nervousness about where those were going. People were slowing down a little bit on spend, waiting to see what would happen. I think there's more of a sense now that a sensible solution will be reached, and people starting to relax a little bit more. So we've seen sentiment just starting to improve just recently.
And Andy, on the question that Tom was asking, whether you're going to be bought out, I mean, what kind of position will you be in M&A or consolidation across the world? Could you be the acquirer?
Well, it's certainly a better position to be in when the bank is now profitable, when it is returning capital. It's a step at a time. We are very much focused on the second half of the journey, which is to get to those double-digit returns.